He's angry about mortgages. It's Angry Mortgage. He's swearing. He's cursing loud. He's old. He's opinionated. And he's been doing this so damn long. This program is about mortgages, and this is mortgage advice, but the advice may not apply to your situation. Contact licensed mortgage professionals for specific recommendations before you make decisions about mortgages. You may not agree with Ron, but if you don't, he thinks you're wrong. Oh, and did we say there is a lot of swearing?
And we are back. Sacha's back.
Here we are.
Yeah, Sacha's back with his fine hat. You got to look at the camera here so they can see the fine hat, okay?
There you go.
Because merch is coming, but we're fussy on merch. We don't like some of the merch. We've been taking samples of merch and, swag, and we're fussy. So we're fussy about what it looks like. So we're not there yet. And by the way, I got to ask this of the audience, of the Angry Mortgage audience. Would anybody actually buy any of this shit? Like, I'm serious. I'm looking at all these other podcasts and they have all this merchandise. Now, I get it. If you're Joe Rogan, you can sell as much merchandise as you want. Although I don't even think he sells merchandise. I'm not sure he does.
You know what? I'm not too sure, but I think you'd be surprised by the amount of people who'd say yes to that.
Anyway, he just sells all these fucking food supplements and shit, and recommends his buddy's cold plunge fucking shit. And what? Yeah,
doesn't fix the hair growth though.
Can I tell you something, folks? There's one thing, and I'm noticing this on social media. It's big, big, big. Is this cold plunge? Well, I gotta let you guys in on a fucking secret. When you're my age and you're as fat as me, you're not getting into any goddamn cold plunge unless you're jumping into a fucking lake that's freezing, okay? Honestly. It's just, look, I'm sure there's some health benefits. I mean, I'm sure somehow people feel better, but, I got news for everyone. My testicles are small enough without them sucking up into my body cavity from this cold plunge, okay? I don't need this. I just don't need it, okay? I don't need a lot of the stuff I see about supplements and peptides and all kinds of machinery to make you sleep better and all this and all kinds of new systems and lighting and blue light and red light and orange light and all this stuff. I am, I'll tell you how I am. I am at a point now where when I hear that there's going to be, there's a movie that I like, and when I hear there's going to be a sequel in 2 years, I'm not actually sure I'm going to be there in 2 years. That actually runs through my mind, okay? So my thoughts about all this stuff to improve your life. Yes, if you're young, Sacha, you're young, go start jumping into freezing water. Go start getting your ass burnt up in a sauna. Do whatever the hell you want. But I'm not doing that.
You know what? I'll do a sauna. That sounds nice. You're not paying me to jump into cold water.
Well, everybody says it's the greatest thing, so I don't know. Hey, all of you listeners and viewers out there who are jumping into these freezing cold tubs, how are you liking it? Just put it in the comments. Yeah, I love it, Ron. I don't care that my balls have gone down to the size of a cherry pit, okay? I'm fine with it.
Maybe we should get some Angry Mortgage boxers and briefs for people to get when they jump in those cold plunges.
I gotta say, look, it's just the way things are today. There's always been a lot of, new health ideas. I've been through so many different health kicks in my life. Maybe it's great, folks, but I'm just not doing it. Okay, so let's get on to the mortgage world. Lots of news about rates. Okay, so let's go to the basic news. Where does the mortgage rate stuff come from? Well, we've said it about 300 or 400 times, but fixed mortgage rates develop from bond yields. Canadian 5-year, we use 5 years, the easiest guideline. Some people take 3-year. It seems to be more people are taking 5-year today. 5-year fixed. Those rates evolve, I should say. They evolve exclusively from the 5-year Canada bond yield. That's our government's bond. That's how we float all these astronomical deficits that the governments run. Okay, the federal government runs anyway. So although somehow we're running a provincial deficit that's starting to approach the size of Spain's deficit. I mean, like, it's just...
We'll see where that goes.
Bizarre, but anyhow. So that's where the rates come from. We had a spike in bond yields in the last 2 weeks, and that is typically a result of thoughts about inflation, even though we had a good inflation report, 1.7 headline inflation of 1.7.
For the most part, yeah. I mean, energy plays a big factor in that.
Yes, it does. That's correct. Although, core inflation was up, and all the rest of the nerd stuff like trim and whatever,
we're going to lose a lot of audience if we get too far.
Whatever the nerd shit is in there, that was up apparently. By the way, I love nerds. Okay, like nerds rule the world. Like Jeff Bezos, he's like, he was a nerd before he became a buff guy with a 19-year-old girlfriend. Was she 19 or 29 or something?
I don't know, man. Divorce does weird things to people.
She's half his age anyway. And Jeff Zuckerberg, Mark Zuckerberg. He's there's two things. He could be the nerdiest guy on the face of the earth, who's now rich as God, or he could be a space alien. Who's come down here, or both. Both are a nerdy space alien are both possible, and that's a possibility. So I love nerds; they rule the world. But I'm not doing the nerd shit. Just not doing it at all. Period. End of story. Not doing it. So, what does this movement in bond yields, which is a function both of inflation reporting and also it's sucked along by the fact that U.S. Treasuries yields are way up. Like, you know what a mortgage rate is in the U.S. right now?
7%.
7.5.
Yep.
Yeah, it's 7.5. It went up last week. Beginning of this week.
Yeah.
During the course of last week. It went up last week and hit 7.5% from some lenders.
Yep.
And it is destroying their new home market. Completely destroying it. It's destroying a lot of their markets down there. How
that affects us, we'll see how that comes down.
But that's also a function of their treasuries. When their treasuries go up, they suck our bond yields along with them.
They do.
So the results are that we have had increases in mortgage rates where there was all kinds of fixed rate, 5-year fixed rates below 4%. Probably most rates were below 4%, and now they are above 4%.
If only someone had told people to lock in fixed rates weeks ago.
Yeah. We pushed the shit out of, we told everybody that, if you can grab a 379, 369, 389, 384, 394, like, just grab it. I mean, if you can get it, grab it. It doesn't, don't be greedy. Don't wait for twos that may never show up. Okay. Ron, I'm going to wait for 299. We saw that in a couple of comments and for the podcast. And yeah, you're going to wait a long, long, long time maybe for that. I mean, I'm not saying it's impossible, but don't be greedy. If people who locked in at 369, God bless them. So what's the numbers like? So as 2 weeks ago, what was a 5-year fixed for? Let's take the very best rate.
Sure.
Let's take the CMHC. And by the way, this is not a lot of people get this rate. This is for buying a home less than 1.5 million. It has to be a lower cost than 1.5 million. It has to be a small down payment, somewhere between 5 and 10%. And you pay this astronomical insurance fee to CMHC or Sagen or Canada Guarantee. But that's always the best rate. So what was that rate 2 weeks ago?
Yeah, I mean, look, you're probably getting about
just
3.64.
Just the number. Just the goddamn number.
3.64. 3.64.
Right. It was 3.64 you could get it for. That's absolutely right. And then we got, if you wanted to refinance your house at maturity, you wanted to, either increase your amortization or pay, we call that a refinance. What rate could we got that for to 5-year fixed?
399, 389.
399? Yep, that sounds right. And now today, when we're speaking today, those rates are all up. So what would be the CMHC purchase rate today?
You're about 20, 25 basis points up. So maybe 389 out there?
394?
I mean, CMHC?
Yeah, just CMHC.
CMHC, yeah, 389 I think is probably the best out there still.
Gotcha.
Yeah.
And the 5-year conventional rate, just for any buying anything or refinancing or anything like that, buying a rental.
409.
409, that's a good rate, right?
Yeah.
That's a good rate. So there are higher rates, right? So your bank could offer you 429 maybe.
Well, everything's a category, right? We're talking the best. So when one goes up, everything goes up. So, it's a range.
But we've seen basically a 0.25% run up in just the last 2.5, 3 weeks.
Well, it's reflective of the bond yields, like you said, right? Huge increase last week, the week before that.
Absolutely. So, what's variable like today? Like, we'll go back to those same examples.
Yep.
If you were looking for buying a house with a small down payment, CMHC insured, what would that variable rate cost be?
Variable rate's right 3.99 in that situation, probably, give or take.
Okay.
And then outside of CMHC, maybe the 4.14s still.
Sure. Okay.
Yeah. They've stayed relatively stable. I think people are waiting for the Bank of Canada announcement, and then they'll figure out what kind of discretion to give after that.
All right. So let's talk about that. So one of the things we observed in the last little bit is last 2 weeks, 3 weeks is that inflation report came out. Good headline inflation, 1.7. Definitely gives the Bank of Canada some cover to do something. We also saw a whole range of really shitty jobs pieces come out.
And it will get worse.
Yeah. So we saw that they just seem to be shutting down more car production every week. Some new car.
Death by 1,000 cuts. They're saying, oh, we'll just do this. And then, oh, we'll just do this. And oh, it's just this factory. Oh, that factory. Yeah.
And then they run out that Melanie Jolie minister out of Ottawa, and she says, yes, I've talked to Honda, I've talked to Stellantis, and all the jobs are secure. Okay, thank you, Melanie. They may be secure, but nobody's fucking working.
Yeah.
Okay, so that seems a little odd.
Still have a job, just no hours.
Yeah,
exactly.
Just no hours.
Exactly.
Okay, yeah, that's fine.
Yeah.
Look, I am so hopeful for the automotive industry in Ontario. I have numerous friends, clients, people who work in it. It's been so important to central Canada. And for God's sakes, like, we used to actually, if you go back a long time, we built our own brands of cars here. I don't know if you won't remember.
Bit before my time, Ron.
Bit before your time, and bit before my time. But if I go back to the 1940s, there were brands of cars that were just built here. As a matter of fact, the whole reason that U.S. manufacturers, because before free trade, before there was a CUSMA or any of those big agreements, there was something called an Auto Pact.
Yep.
And the Auto Pact was a treaty between U.S. and Canada, which said, okay, we're going to be able to sell all the cars we want in Canada from Detroit, because there was no Honda or Toyota then, okay? Back in the 1960s. There was, but there wasn't any here.
Not in Canada, yeah.
So you're going to allow us to sell all the cars that we make in Detroit, in Canada, with no tariffs, no just regular price. And we're going to build cars in Canada that we're going to bring to the States and sell them in the U.S. Okay, so this whole kind of reciprocity about automobile manufacturing, and the reason dates back to like that 1940s stuff where there actually was Canadian car manufacturers, okay? So the deal is this, like, we're going to buy your car manufacturers. They're going to become part of an integrated system. Like General Motors actually absorbed about 17 different companies as it grew from nothing, okay? So yeah, that was the reason for the reciprocity forever.
Yep.
So it's very meaningful, very sad, very, it's really heartbreaking to think about all this automotive job loss that is happening and that could happen, and some of it could turn out to be permanent. So it is heartbreaking.
Well, we're sort of hearing news too, but I think it was the U.S. ambassador recently said he's hopeful for a deal by July or something like that. So a lot of the meetings in the next month might be really important to sort of seeing some direction, but who knows? Who knows with what's going on?
Yeah, who knows? Trump decided to he's given the European Union till midnight on June 1st to do everything he wants, or he's going to put 50% tariffs on the European Union.
All of Europe, yeah.
All of Europe.
See how that goes.
50% tariffs, like,
Yeah.
Screw you.
Yeah. And your students aren't allowed to come to our universities either.
And can you imagine the president of the United States stopping and saying, hey, Apple, hey, Tim Apple. That's what we called him once, Tim Apple. Tim Cook, if you raise one price, 1 cent, you're in trouble. And I expect within 1 year, you build every Apple phone in America.
Sure.
Like there's lots going on in that man's mind every single day. So I don't know. I'm not going to. I've decided to stop predicting when there's going to be a tariff deal. Okay. I mean, I've decided that
you can't. Yeah.
It is the most volatile, nonsensical, hard to understand. And we always have some like Maple MAGAs come on the comments and say, "You're so wrong. You have Trump derangement syndrome. That's what's wrong with you people. You know, you don't understand how brilliant he is." Okay, I'm just going to say one thing to that. All you Maple MAGAs, you should please fuck yourselves. Okay?
I love those guys. They're the ones calling me the bald communist. Get that bald commie off.
You have red tendencies. But anyway, the point is that, look, there's no rational person, there's no thinking person could ever say that, oh, nothing's Trump has done has hurt Canada. Of course it has.
Yeah.
There are layoffs going on right now as we speak that everybody likes to say, no, Ron, Trudeau did that, not Trump. Okay, Trudeau did a lot of bad shit, but Trump has done some things that absolutely are impactful in a negative way on the economy of Canada.
Well, and our counter tariffs are increasing the inflation rate too, right? So
half of them came off, but it doesn't matter. All right, look, the important thing about, let's get back to rates because it's important for Canadians. So there is rate volatility, but I believe, and I firmly believe it, that we will see cuts from the Bank of Canada because the economy is that bad. It's just that bad, okay? We're going to see cuts, and that's your best option today. Your best option is variable. So let me again, before everybody starts...
Should we talk about where that mark is?
Yeah, I'm going to tell everybody where that mark is. Okay, so the important part to understand is this. If you've got a 3.79 5-year fix, fucking keep it. Keep that rate. 3.84, 3.94, all those rates that are fixed rates that are below 4%, keep those rates. But if your bank is telling you on your renewal that you need to pay 4.29, you need to investigate variable. Like you don't have any options, okay? You need to seriously think about variable. And there's like, honestly, there's just two sort of camps in the world of rates, okay? There's people who, they will not take variable under any circumstances. They just don't want to have to think about it. They don't have the personality to live with it, okay? But I want all you, again, I'm going to come back to this really briefly. Everybody who has a fixed rate below 4, don't change it. Don't go variable. Listen carefully to what I'm going to say now. So there's people who are afraid of variable. That just doesn't suit their personality. They just don't. They just have to have certainty. So if you want certainty, take a 5-year fix. But I'm going to make a recommendation right now. I am absolutely sure variable rates will come down. The Bank of Canada will cut. They will cut at least 50 basis points this year. A lot of people are saying more. It could be much more. There's people who believe there will be a worldwide debt crisis that could emerge. Now, I'm not one of those people who are going to suggest that's a certainty. I mean, I sometimes have worries about this thing, but I'm not going to use that as a basis of how to approach this.
Yeah, you have to take balance of probabilities.
That's exactly correct. So what I think about using balance of probabilities are that if it was my choice today, and I don't have any options below fixed, I have no fixed rate options below 4%, I'm going to take a variable today. Let's imagine variable is as high as 4.1. 50 basis points off that, I'm down to 3.6. Now we've got a meeting on June 4th. We got a meeting on July 30th. There's going to be cuts. May not be on June 4th, but definitely if not June 4th, July 30th, there'll be cuts. So, and the cuts will probably follow one after another. They don't typically just go one cut, stop. Typically, they'll go 2 cuts. So I would say by the fall, by after Labor Day, we're looking at 50 basis points down. How could it go lower? It could go lower by really, really bad unemployment. Now, we just read about TD laying off 2% of its workforce just last week. Okay. And by the way, I'm not picking on TD because I guarantee you every bank is quietly laying off people. Every insurance company is quietly, slowly laying people off. Okay. Because guess what, folks? There's less loans in Canada. Every month there's fewer loans than the month before.
Well, and not just that, some banks are actually cutting back on the credit that they have given people. If you're not using a lot of your credit, they'll say, you know what, we're going to reduce your line of credit by X amount. I've had a couple clients come to me talking about that.
Yeah,
they're reducing their debt.
That's a normal practice. We have to, because I've been through this stuff a lot in 30 years in the business. When times get difficult, the banks employ algorithms to search through their entire database of their client. The algorithms sort of look at, hey, this client's got a HELOC, a home equity line of credit. They've got $100,000 limit. Oh, they've used 50, but they've started using it more in the last 6 weeks. And we also noticed because we have their credit card business too. Oh, we've also noticed that something seems to have happened to one of their pays, because the bank can see your pay going in every 2 weeks, right? Well, there's something seems to have happened to one of their pays. This couple, I mean, looks like their pay is down somewhat. I don't know what, but there's nobody actually looks at it. A computer analyzes all this stuff. Okay, it's all just an algorithm. Okay, and the algorithm
getting more sophisticated by the day.
And that spits out, to your point, hey, this guy's got $100,000 HELOC. He's used 50,000. He's accelerated his use. Let's just cut him off at 55 and tell him the 45 went away. Yeah. Okay.
Wouldn't that be making the situation worse, though? Because then you're increasing people's credit utilization, you're decreasing their available sort of flexible backup situations. Wouldn't that just compound the situation?
Do you think a bank cares?
I guess not. They're there. Yeah.
Jesus
They got to
Christ.
protect themselves.
I mean, banks doesn't care about your flexibility. Okay. By the way, no lender does. I'm not picking on banks. Could be a credit union, could be anybody. Okay. Could be any lending relationship. They're in business to make money. And if they think you're a worse risk, they want to reduce their exposure. Yeah. And, when times are tough, banks just think about exposure. They don't think that there would be a cascade of problems if they made it harder for you. They just think, well, you're probably going to have a problem anyway, so I'm just going to make sure I'm not going to be as big a part of it as I could possibly be. Yeah. That's all it is. So again, people like to kick banks' ass, but at the end of the day, they are experienced, they are knowledgeable, they've been through this before, and they're going to reduce your credit if they don't think you should have it. It's as simple as that. So that's something we see. That's interesting you've seen that. I've heard some rumors of that happening, so that's interesting.
Well, I was just wondering, so take variable if you get above 4. So how long should people monitor
fixed
this?
Gets above 4.
Yeah. Sorry, yeah. It's very, very clear. So how long should someone monitor, right? What are we expecting fixed rates to look like in the near and long term?
That's a great point because, there were years when rates were all very, very low. We went a decade where rates were incredibly low. We went years when the Bank of Canada rate was extremely low. And then we went through a point during COVID where it went to nothing, effectively went to zero. But I think the truth is, and so through those good times of super low interest rates, we call it the zero interest rate program, okay? People didn't pay attention to rates.
Yeah.
Okay.
You need to pay attention when you have a variable. You need to.
So that's the key. Yep. We endorse the idea that you would take a variable, that you will eventually end up with a rate that is in the mid 3s to low 3s by the end of the year. That's our thoughts. That's our thesis. But we also believe that there will be an opportunity where sub 4% rates reappear again. They may reappear only briefly, such as this time.
Yeah.
These rates were only available for about a 6 to 7 week period. And then they came and they went. They came and they went. Okay. So here's what I also believe sincerely, though. People are so attuned to rates now because the zero interest rate program is over with. Okay, it's gone.
Yep.
So everybody is very, very focused on rates.
Yep.
And ways to look at rates have never been easier. You can go to a company like wawa.ca. You can go to a company called Rate Hub. There's so many easy ways to monitor mortgage rates today. It's just simple. So my thought is simply this. Yes, we will probably have another brief moment in time, whether it's later this year or early next year. Because you know what? If the economy gets really, really, really bad, not only will there be lower variable rates, quantitative easing can come back.
Yeah.
So just not to overburden everybody with what quantitative easing is, it's a method that central banks use to actually force the reduction of fixed rates. It forces it. It's the central bank buying bonds from the government, and that creates a lower floor price for bonds, creates better yields.
Everything else be damned to protect.
Yeah, at the end of the day.
This next question matters less for variable, more for fixed. What should we say to people who are considering 3 versus 5 year terms, especially if they're seeing right now where 3 is maybe slightly better than 5?
Well, it doesn't make sense. I'll explain why. So we were very strong advocates of 3-year when inflation was at its height.
Yep.
So we were always told people, do not take a 5, take a 3. Sometimes we suggested 2-year because we had inflation running at 8%. Rates were in the 7s, high 6s and 7s. And we said this will not last forever. So you should take a shorter term and then lock in later on when rates come down.
Yeah.
And we were absolutely correct. That is what happened. People who took a 3-year, they're coming out of a 3-year now. There's lower rates that are available. Even the rates in the 4s are lower than what they got as a 3.
5, 6,
so
yeah.
It turned out to be absolutely true.
Is there a risk that someone taking a 3-year might be in a bit of an eye of a storm still, or what do you think?
Well, look, at this stage, we don't have inflation. Inflation, the last headline inflation was 1.7%. So our advice to people is, even though it's a very volatile rate situation, thanks to the geopolitical situation, that we still believe that this is not, I repeat, not a high inflation time. It's certainly not. It could get a little worse. It may never get to 8%. It may not. We don't know. I know there's people going to be in the comments like, yeah, I think it's going to be like Weimar Republic, Germany. It's going to go to like 1,000%. Okay, that's fine. Oh yeah, it's going to be like we're going to be like Argentina. It's going to be 100% a year. Okay, whatever. Okay, you can say what you want. Get back on your meds when you can. But the reality is that you should not take a 3-year if you don't have a meaningful reason to believe that there's a strong certainty of lower rates at 3 years, okay? Because that's where we were in 2023.
Yeah.
We said in 2026 rates will be less. In 2022, we said in 2025 rates will be lower, and we were right, okay? So take a 3-year. Just sort of manage yourself through the high rate environment.
Yeah. So back to balance of probabilities. There's not that reasonable expectation then that things will be lower in 3 years.
The point is that if you don't have a form of certainty that rates will be lower in 3 years, just take 5.
Yeah.
Just take a 5-year because you're playing defense. That's what 5-year fixed is. It's defense. Well, why don't you take a 10, Ron? Okay. Yes, you can get a 10-year, but instead of 4%, it's 5.5. It's 5.25.
And then we're into penalties if you ever want to break it. Oh my God.
First 5 years, the penalties are off the chain. So yes, we don't. We should bring back 30-year, Ron. Okay, maybe someday. By the way, there never was a 30-year in Canada, but yes, maybe someday it'll come. I mean, I know that the new prime minister's talked about it a few times, but it's a big thing to happen, and I just don't think we'll see it soon. So yes, today you should make your choice between variable and a 5-year, because you're just taking maximum protection when you take 5-year, and there's no obvious reason why rates are going to be much lower in 3 years.
Yeah.
But I do believe there is a potential, and I was right the last time, I hope I'm right this time, that if you take a variable today and you will enjoy these rates at 3.6, 3.35, it may be lower, could be even 3.1. if we took 1% off the Bank of Canada rate. Why not?
Sure.
Well, Ron, I think suddenly the economy is going to recover. Okay. You're smoking dope. Okay. Like you're not thinking straight. Okay. No one has ever, whenever I challenge people with this idea is, okay, so explain to me what's going to make the economy much better. Oh, they're going to solve this tariff problem. Really? Okay. They might fix the tariff problem, but won't all those U.S. companies who manufacture in Canada think to themselves, we still got another 3 years of Trump.
Yeah.
Let's not take any chances.
Well, the fix the tariff problem is also some tariffs will stay. That's been made very clear. It's just a matter of which ones and how much.
100% true. So there is no person who has ever heard the U.S. president say, yeah, we'll cut a deal and there'll be no tariffs at all.
Exactly.
I haven't heard that from him ever. No. So look, we're in it. We're in it for a while. And even though there will be some resolution, I don't believe that this whole really incredibly chaotic world is going to continue eternally. Mm-hmm. I do believe that there will be a deal made and there'll be some more certainty. But does that mean that Canada is going to be a magnificent place to manufacture automobiles and steel and other products in? That's going to have a substantial reason for those industries to thrive? I don't see that. No one's ever challenged me with the idea that there would be. And I say to everybody, open question to everybody, what is suddenly going to happen in Canada that's going to just reignite our economy? Like, what is it? Mm-hmm. Okay. It could be energy. It could be minerals. Mm-hmm. But as much as our
takes time
governments talk about it, sweet fuck all has happened yet. Okay, like nothing yet. They haven't even built the goddamn road up north yet to get to the Ring of Fire, to get to the critical minerals. We just had, we've had on again, off again pushes against. First of all, during the election, the Prime Minister says, "Yeah, we're going to be an energy superpower." Then suddenly, after the election, we're going to be a clean energy superpower. So I don't know whether that means just more windmills. Mm-hmm. Like, what the hell does that mean? All right, but here's another question that I really wanted to ask you. Mm-hmm. So close on that topic. Take variable. If you cannot get below 4% fixed today, take variable for now. And keep an eye on the rates. There's easy ways of doing it. Wawa.ca, WOWA.ca, Rate Hub. It's easy to keep track of rates. When you see a lot of rates breaking down into the 3% range again, you can just lock in for free with your existing lender. That's eminently possible. Yeah. And by the way, a lot of people did do that in the last 3 months. All right. So I'm going to ask you a question, Sacha, because you take a lot of calls. What are clients... When clients come to you with their mortgages maturing, their mortgages coming up to their renewal date, do many of them ask you about refinancing, which would mean consolidating their debts or taking out some cash?
I think there's a slight increase in people who are interested in refinance right now.
But not a huge increase.
Not huge. I do think it's related to Canadians taking on more debt. So there is debt. There are still the odd people who want to renovate their house and try and flip or something, which, we'll see. But yes, I think there's a slight increase in refinances. Mm-hmm. It depends on mortgage size, how long they've owned the property to, what their situation is. Yes, slight increase. Yeah.
And is there some requests for reamortization? So in other words, if people are down to a 20-year amortization at the point of their renewal, do they say, hey, can I go back to 25? Do you get some of those?
We are seeing a large number of
those.
That's
a jump.
Yeah. So it's so refinance to increase the amortization, not just refinance to take out the amount of money. Yes. Excellent.
Because that's a way to make people's payments go down.
Correct. Yeah.
Now, a lot of people, if you're a financial planner, they would say, oh, you're nuts. You're going to increase the amount of interest you pay substantially because you're going from 20 years to 25 years. That's a huge chunk of interest, which is true, except people also got to live and function in the world.
Yeah.
And there's lots of prepayment penalties. If things get better, you can throw some money at it, increase your payments, throw some cash at it, and it could go right back down to 20.
Yeah, so I think the increase in that is probably proportional to a lot of these people who had these 1-2% mortgages that are coming up for maturity after 5 years, right? Sure. And so, yeah, you're seeing people say, I just can't afford a doubling in the mortgage payment. Interest be damned, I just got to keep the monthly payment in the realm of where it is. So fair enough, refinance to extend the amortization. And exactly to your point, I always tell people, look, if you're in that situation, it's better to have the lowest monthly payment, and most banks and lenders will allow you to prepay anywhere between 15 and 20% of the initial mortgage balance annually, right? And so if you have the extra
and
cash,
increase your payments if you want.
and balloon payments 15 or 20%, exactly. And so if you're in that situation where you have extra cash, particularly if you have some of these really common 2-in-1 mortgages right now, where as you pay down the mortgage, it becomes available line of credit. So it's
the line of credit is attached to the mortgage increases.
Yeah. And so it's there for emergencies regardless, right? And so if you're in that situation, keep the monthly payment as low as possible so that you have emergency funds. Put it on the mortgage as extra prepayment, up to 20% of the initial mortgage balance, or 15 depending on the lender, and play defense. Yes. Yeah, that is very common right now.
So that's something you're seeing a lot more of.
Yeah.
Okay. So let me ask you something. I think you ran into a sort of a string of purchases that occurred in the last few days.
Yeah, something about the long weekend makes people want to buy houses.
Yeah.
It was a busy week. Holy crap.
All right, so let's talk about those purchases a little bit.
Yeah.
So what do those they may not be new home buyers. They may just be move-up buyers. But what do they look like? What do those people are they new home buyers? Are they first-time home buyers? What are they?
There are a lot of people in their late 30s buying homes for the first time.
For the first time. Okay.
Yeah. Who have very good income and or very nice parents, but it's people in their 30s, first-time home buyers. There's a lot of them right now.
Because CMHC purchased a report that CMHC believes that over 50% of all first-time home buyers are getting some sort of support. 54% are getting money from parents, or parents are actually co-signing.
Yep. I think that's fair.
Did you run into any co-signers this last couple of weeks?
I get a lot of people still asking me if people can be a guarantor without having any responsibility, which the answer is obviously
no. Guarantor has all kinds of responsibilities.
Yeah.
So we're talking about them not going on the title of the property.
Correct. Yeah, but people want to help out but have no responsibility, and it's not a reality. But yes, so there are co-signers in odd cases, in odd cases where either maybe there are some credit issues or some income issues, or maybe one of the applicants took maternity leave last year and that affected the 2-year average, something like that. Yeah, there are co-applicant parents who are helping out who want to go on for one term and then come off after.
But are most of these people you suggested that most of the string of purchases that you saw this week are first-time home buyers?
First-time home buyers, late 30s, yeah.
Gotcha. Okay. Yeah, there's nobody in their 20s is buying their first home anymore. Yeah. And those people are coming in, are some of them using CMHC, or most of them are not using CMHC?
The majority are not. And
you're seeing in probably that same kind of ratio that we just talked about, you're seeing people getting some help from parents at some degree.
A decent percentage. On
down payment.
Yeah. I mean, there are a lot of dinks out there, double income, no kids, right, who have enough and are able to do it on their own, decent jobs in the 6 figures each. But yeah, the majority are getting some kind of help somewhere. Yeah.
So I think it's really important to hear that for all the viewers and listeners. There are still, and by the way, I mean, it's not like we're trying to say that the housing market's fully recovered, because every indicator from Southern Ontario would tell you it's just getting worse.
But every house bought under asking. Every house,
yes.
Every purchase I've done has been bought under asking.
Well, that's interesting.
Yeah,
every single one. Wow. Okay, so there is maybe the very beginnings of single family and townhouse. Many condos in that mix, or mostly houses? No. People don't buy houses.
No, people trying to sell condos. Got a lot of people trying to sell condos.
All right, so it's a very interesting point you've raised. So you're looking at some people who have gotten other sometimes their own resources. They've been saving up, but they have decided to buy now because instead of bidding wars, there's under asking.
Yes.
That's a big, important point, I think. Yeah, that's an important point. Any CMHC purchases, any less than 20% down?
Yes, there are some.
Yeah.
There are some.
Okay. And that's fascinating. So, yes, you know what it also proves to everybody who's listening and watching? Canadians want to own homes. Canadians don't want modular home yurts that are really subsidized. They don't want rentals. If it is the aspiration of people to own their own home.
Yes.
Period. Okay, that hasn't changed. The world hasn't changed. As much as you hear the stories of you will own nothing and be happy.
Oh God.
The majority of people definitely want to own their own home.
Yeah.
Okay. And that's just proven by your statement. I mean, these are people who they are looking for a little bit better price.
And there are some people who need to do the CMHC insured by necessity because they do not have more than...
They don't have assistance. Yeah.
Well, they don't have assistance, and which in turn relates to down payment, exactly. But there are some people who are seeing the rate and doing the math and are saying, I'm going to be in this house for more than 10 years, and so the discount on the rate, I think, is probably going to benefit me more than the insurance premium I'm going to pay, which I think is a fair argument for people who want to stay long-term in that property too.
So another point about these people, this string of purchases that you've encountered in the last 10 days. Yeah. A lot of conditions on these agreements, like there's inspections, there's... Yes. Okay. Yeah. So, I like the contrast that Sacha's bringing out. So when we think back to 2021 and 2022, there was no conditions. Like, you're making a firm offer, zero conditions, zero anything. It's just, we're going to buy. We're going to buy right away. We're bidding you up. There's no conditions. We don't want an inspection. We don't care about financing. We don't give a damn. Yeah. Okay, so, and that's completely turned around.
Correct. Buyer's market. Yeah.
So we've got, people are paying under asking. People are buying for under asking.
Yeah.
People are putting in inspection conditions. People are putting in financing conditions.
Yes.
And people have gone back to what I would call a more normal, rational approach to buying homes.
Yes.
Okay. Well, that's great news. That part of it's great news. I would like to see the prices come down a little bit more, but what can I tell you?
Don't piss off all of Canada by saying that.
Yeah. Yeah, because God knows everybody in the federal Liberal government doesn't want any house prices to come down. Okay?
Well, I love how when people don't own homes, it's always, I want the prices to come down. And then as soon as they own the home, they're like, well, actually it could go up.
Yeah, but and it's true. People we're all human. We don't, if we've bought something, we don't want to see it fall in value.
Yeah.
Although, folks, just so you know, every single car you've ever bought lost value the day you drove it off the lot. So it's only really true for real estate. Fair point. It's only true for real estate. That's it. All right. So I am glad to hear that people are paying under asking. That encourages me. We have seen some drops in house prices. Matter of fact, I'm doing a whole separate video on this. We're seeing more power sale actions.
Yes.
We're seeing a lot more power sale actions. By the way, sometimes when you use the word a lot, it's a misnomer because we're going from a world where there were virtually none. Because I'm going to tell you something. In 2021 and 22, that was a zero. There was effectively none. Nobody was ever losing their house to power of sale or foreclosure. And some other process called quartered sale. But today we see it's growing. Yes. And there's a lot of reasons for that. I'll go into more detail later. But we certainly are seeing it. And it's funny, everybody who's looking at those power of sale situations, everybody should know this. They're not necessarily the best deal. No. They don't always turn out to be the best deal.
They've ripped out the copper, the floorboards are gone.
Hopefully not. You can see that. But I would still continue to suggest to people that, as per Sacha's thought, that everybody's paying less than the ask on the listing. Yeah. That should just continue that way. Don't keep searching for power sales. You can if you want, but just the old-fashioned way of just negotiating with the seller and getting the best deal is still a good way.
Yeah.
Which takes us to our favorite part of the program.
What the actual fuck, Ron?
Yeah, I got a serious what the actual fuck today. Like, Dave Eby, Premier of British Columbia. What the actual fuck is wrong with you? What the fuck is wrong with you? Okay? Like, I was a Dave Eby fan at one time. For everybody who doesn't know who Dave Eby is, the premier of NDP Premier of British Columbia, he is 10 feet tall. And
Jolly Green Giant.
10 feet tall and weighs about 75 pounds. Okay? And he was my hero years ago. He was a guy who brought in, he was one of the first governments, period, to push against Airbnb, to suggest that Airbnb is just an illegal hotel room. It is removing taking permanent residents away from people, that it's illegal anyway. I mean, we didn't change the laws to say you could operate your own hotel in a little condo, okay? So I thought that was a great move. He was a pioneer on that. He was a pioneer on no foreign buyers. British Columbia was the first place to bring in a foreign buyers ban, okay?
It's because they had it bad.
It was bad. It was really bad. And by the way, a foreign buyers ban is not going to send the $500 billion back to China that came in.
Yeah.
Okay. Like it's not a perfect solution, but at least somebody put up his hand and said, yeah, no, we don't want foreign nationals coming here and buying houses and, half the time leaving them empty. So he was my hero. But he is obviously way off his meds, or he has some sort of fucking brain aneurysm happening to him. He's lost his fucking mind. Okay?
What's going on now?
So he says, no pipelines to Tidewater. No, Alberta, fuck yourself. We're going to have, our plan is to have a carbon-free British Columbia. Okay.
I see. Interesting.
So please fuck yourself, David Eby. No, this is stupid. Stupid. Okay. He wants to maintain the pristine waters of British Columbia. Okay. That's a nice goal. But we also are going to be so fucking broke from this goddamn trade war. We need to take the only action available to us, which is energy. We have the third biggest energy reserves in the fucking world. I was listening to a guy who runs a great podcast, and he pointed out that there is probably so much natural gas in British Columbia, Alberta, that could last for 300 years. There's no such thing as peak. There might be peak oil. There's no peak gas, okay? There's so fucking much of it, okay?
There's a lot.
We could ship liquid natural gas out of the coast of British Columbia to the cows come home. And to all you people out there who think China is a leader in renewable energy, I just have some news for you. Last year, 2024, China opened a new coal-fired electrical plant. Coal, the dirtiest thing you could use. A new coal-fired plant, 2 of them every week, okay? Hundreds of them, hundreds and hundreds of them, okay? Oh, but Ron, they're also very big on renewables. Shut the fuck up. If you're opening coal power plants, it's the dirtiest thing you could ever use. Finally, Dave Eby, somehow, like I said, off his meds, tumor, I don't know. What the fuck? I hope not. I don't wish him any ill.
Good correction there.
But there might be something's gone wrong with his brain, is that he wants to give most of British Columbia back to First Nations people. Okay, like if there's a park, if there's a park that people have been going to, but it probably originated with First Nations, which, let's face it, folks, every square inch of Canada originated with First Nations. Okay, that's the way it works. But he's thinking that maybe they should just keep that park for their spiritual needs, and no more other than First Nations people can ever go in the park again. So as somebody like myself who was born in the Burnaby General, raised in North Vancouver, my dad was born in Revelstoke. Like, I have all these BC roots. My position on that whole idea, Premier Eby, is fuck yourself. Like, totally fuck yourself. Here's my thing that I say over and over. I say it every time. We must honor the treaties.
Of course.
Whatever treaties we have with First Nations people must be honored. If we've cheated them, give the money back. If we've done something wrong, if there's something that we obviously did not honor the treaty, fix it. But that's it. That's all, okay? We're not reconstituting Canada as a whole different place, okay?
That opens up a whole can of worms.
Which makes no fucking sense, okay? Honor the treaties, and that's it. Nothing else, okay? So David Eby, I don't know what happened to you. You're my hero. Now you're 0. And I just wish you'd have lost the last provincial election. That's my rant for today. We'll see you next week, folks.
If you like the pod, well, don't just sit there. Go to YouTube, Apple, Spotify, and all the other ones and like the pod. And don't forget to subscribe so we can keep being angry at mortgages and swearing about mortgages. Angry Mortgage could use your support.